So interest rates have come down recently, and we've seen a big spike in mortgage application. Almost 50% of them are for refinances this year. And a lot of homeowners are asking the following. They're asking, is it a right time to refinance? What documents do I need? Are there any loans that don't require much paperwork at all? And what should I do to avoid costly mistake? So in this video, I'm going to be breaking it all down for you so that you can make a smart decision for your mortgage. And if you're new to my channel, my name is Meredith. I'm a mortgage broker, and I put out educational videos every single week. Now let's get into it. Okay, so here's 4 reasons why you might consider refinancing. Number 1 is going to be lowering your interest rate. Now this is the most common reason, but a lower rate alone isn't enough. Has to make financial sense. So even a 0.5% drop can be worthwhile depending on your loan balance, but you have to look at the overall cost versus savings, and I'll cover that when we talk about refinancing traps to avoid later. Now, number 2 is going to be combining a first and second loan or a HELOC. So if you have a first mortgage, a home equity line of credit, or a second loan, it might be cheaper to refinance them into one fixed rate mortgage instead of juggling 2 payments, especially with HELOCs now because they have variable rates. Number 3 is going to be a cash out refinance. So cash out refinance lets you pull equity out from your home to pay for home renovations, debt consolidations, or even investments. Now, I'm not saying that you should treat your home like your credit card, but you need access to funds. A cash out refinance could be a better option than doing a HELOC, which has higher interest rates today. And number 4 is going to be removing your PMI. So if you bought your home with less than 20% down, you still might be paying PMI every month. And if your home has gained enough equity, refinancing into a conventional loan can eliminate PMI and lower your monthly payment. But if your current rate is super low, you'll want to run the numbers before refinancing just to make sure it's worth it. Okay, so here's what you need to refinance. So a lot of people assume that refinancing is automatic, but you still have to qualify just when you got your first mortgage. So lenders are going to check the following. They're going to check your income. They're going to look at your pay stubs, W-2s, or tax returns. They're going to look at your assets. They're going to look at your bank statements and also your credit score. And a strong score gets you better rates. And if you've had any job late payments, job changes, credit issues, that could impact your ability to refinance. So you want to check with the lender before you assume that you qualify. Now, there are 2 loans that don't look at income that are very easy to refinance. Let's go over that. Okay, so here are 2 no document refinance loans. Number 1 is going to be an FHA Streamline refinance. So if you have an FHA loan and want to lower your interest rate without a lengthy approval process, an FHA Streamline could be a great option. And this is designed for FHA borrowers who want to refinance into a new FHA loan with very minimal paperwork and lower cost. And key benefits include there's no appraisal required, so no need to worry about your home's current market value. Also, there's no income verification, so you won't need to provide pay stubs, W-2, or tax returns. And also they have, you can do a soft pull instead of a hard pull. So even if your score has dropped, you may still qualify. So this makes the process a lot more easier than a standard refinancing. Now, however, if you're paying FHA mortgage insurance premiums, then you're still going to have this on your new loan. So always compare your savings with the cost of the MIP to ensure that refinancing is worthwhile. So number 2 is going to be an VA IRRRL Streamline refinances. So this is for veterans and active military with a VA loan already. And the interest rate reduction refinance loan, it's an easy way to reduce your mortgage payment with very little paperwork. And some of the benefits include there's no appraisal, no income documentation, no need for tax returns, proof of employment. There's also, same thing, soft pull credit. So even if your score has dropped, you may still qualify. And like I said before, there's no appraisal, so your home's current value doesn't matter. And you can also roll in closing costs into this loan to avoid any upfront expensive. But remember, the VA does charge a funding fee unless it's exempt due to service-related disability. So if rates have dropped since you took out an FHA or VA loan, these streamlined refinance option, they offer a hassle-free way to lower your mortgage payment. Okay, so now let's talk about the common mistakes people make when refinancing and how to avoid them. So number one is gonna be the no closing cost trick. So lenders love to advertise no closing cost loan, but here's what they don't tell you. They often roll these fees into your loan balance, meaning that you borrow more money and pay interest on it on the long term. So you always want to ask, are fees being added to my loan? What's my total loan amount after refinancing? Now, number two is going to be resetting your loan terms. So many lenders restart the clock on a new 30-year loan, even if you've already paid 5+ years into your current one. So that means that you could be paying way more in interest over time. And instead, ask for a loan term that matches your remaining years. So for example, if you have 25 years left, refinance into a 25-year loan instead of a new 30-year term. So number three is not running a break-even analysis, because refinancing isn't free. So you need to ask up front, how much will I save per month? How much will it cost to refinancing? How long will it take to break even? So for example, if you're saving $200 a month and the cost is $6,000, it's gonna take you 30 months to break even. And if you end up selling in 2 years, refinancing doesn't make sense. So you always want to do the math first before you refinance. Okay, so refinancing can be a smart financial move, but only if it truly benefits you in the long run. So before you make a decision, always compare your new payment, the loan cost, and the break-even point to ensure that it aligns with your financial goals. And you want to avoid common pitfalls like hidden fees, unnecessary loan terms, and refinancing when the savings just don't justify the cost. And if you're unsure, speak with a trusted lender to explore your best options. And I hope you found this video helpful. Consider subscribing, and I'll see you on the next one.